Iconic Apple CEO Steve Jobs passes away at the age of 56 after a long battle with pancreatic cancer. Not only did Jobs revolutionize the technology space, he defined multiple generations and life as we know it. European markets are trading higher on speculation that Europe's leaders will come to an agreement to contain the sovereign debt crisis and as investors await a rate decision. Futures suggest a higher open for Wall Street, while Asia closed up for the day. September same-store sales and jobless claims will be in focus. I'm Jill Malandrino, and the morning call starts right now.
Good morning. I'm Scott Rutherford, Chief Strategic Officer with T3Live.com.
And I'm Jill Malandrino with The Street, and together we bring you the morning call. Before we jump into it, our condolences to Steve Jobs, his family, and to the company.
Yeah, I'm sure everyone at this point have read so many stories about his life, what he's accomplished, how inspirational he's been. I know I was up all night reading it and this morning, and it touches a lot of different chords on just what he's done, what he's meant for America. And everyone that reads it takes something different out. And what I would suggest is read his speech, his commencement speech from Stanford, and read about how he just cherishes life, and it just shows you how you could be 56 years old, a billionaire. Cancer doesn't discriminate. You could be my wife's father, same pancreatic cancer when 48. My mom sends me a tie because she just had breast cancer. It's all around us. So at this point with life, no one's exactly where they want to be. We're in a recession. People are talking about a double dip recession. The housing market is in shambles. Washington, everyone just is up in arms with. But things can change quickly. And it's up to you to change them, and you have to figure out what that is for you, and just get yourself in a better position, because no one's going to do it for you, and don't sweat the small stuff.
Right, you're absolutely right, Scott. We have to take things into perspective and realize, yes, trading in the markets are very important, but you can't lose sight of that. And Steve Jobs, he revolutionized the technology space. He changed the way the world is today. He revolutionized multiple generations. So I think we have a lot to thank him, not only as a visionary, but as a person.
And what's important there is he reinvented himself. Mm-hmm. You could always reinvent yourself. If you're not happy where you are in life, change something. Do something small. A small change could go big distances. So at this point, I know we have to get into the markets. I don't want to keep talking about it, but it's just a very sensitive topic.
Right. I mean, you can go on and on about what a wonderful person he was. So the S&P is up 6% since 3 o'clock on Tuesday. SPYs look strong. The Qs look strong. The futures are up this morning. How are we positioning ourselves today?
Well, earlier this week, we broke that lower range. That was what you call a push-through failure, because we didn't close below it, and we didn't precipitate down to the big support we talked about at 1020 to 1040. We hit that 1070 area, which was a bit of an overshoot and is actually a bit of a trap for the bears. So if you look here at the chart, I'll show you what I'm talking about. Now, this was the lower range we were talking about, obviously head and shoulders top that triggered. 1250 was one of your sell zones. Down here, a lot of guys were maneuvering it, trying to be long versus 1100, and then we broke below it and then came back above it very, very quickly. We call that an outside day. We call that a day to take notice. A lot of traders would have gone long at just around 1100 once we came back above it. If you did so, you're up about 44 handles, and now we're opening into some resistance here around 1160. If you look at this pattern, you have a high, lower high, another lower high. This would be an area that I think is prudent to take some profits if you had the luxury or the wherewithal to buy into these 2 days. And then I think some traders might even try and short a bit up here, because they've been rewarding selling that third up day versus buying it, especially with the big jobs number coming out tomorrow.
Right, we have the big unemployment number tomorrow. There's a lot of speculation that European leaders are focusing on an orderly debt default for Greece, so we have that to look at. The Qs have been nice and strong. I think we should take a quick look at them. They've been leading the market as well.
Yeah, well, that's what we look to do. We look to find relative strength. And if I show you the Qs, you'll see the Qs never made a new low. The Qs came in and tested the low from early August, never broke below it. That's why it had such a nice bounce. A lot of stocks within this group also had a nice bounce, but we're opening right into this broken trend line. Here is that trend line that got breached before the breakdown. So hopefully, if you got stopped out of some scenarios here, you bought into support. That's how you actively manage your positions for cash flow. We're coming into this, just say, 54, 50, 55 area. So you have a high, a lower high. Will this create another lower high, or will this trend break? And I think that's what I see in a lot of these patterns, is you could buy on weakness, you can get perfect prices, but if you chase these things at all and you buy strength, you're very frustrated. So maybe that trend changes, and that's what we're going to look at as we move forward.
Speaking of outperformers and relative performance, let's move on to the consumer space. It's been acting really well. We'll take a look at high-end versus low-end retail. So let's take a look at the RTH overall.
The RTH has been impressive. A lot of people have been saying the consumer is dead, no one's going to spend. And I think there was a bit of a slowdown after what everyone saw in Washington and all these European headlines. So earnings are going to be important and the retail sales number. But as of now, if you look at the chart, the RTHs do look good. Look, I showed you the Qs. The Qs came all the way back down to test the August lows. The RTHs didn't even think about it. It made a higher low. So I'm going to look to see is, can any of these groups start to break these downtrends? So right now it's packed, it's bouncing back up into this range, probably an area to sell a little bit, but then if we could hang out in here and start to break this downtrend, this will show you a healthier market, and we'll see if other sectors follow the same pattern.
Right, so today we have September same-store sales, and the consumer will be in focus, especially with some weakness that we had over the summer. Lulu on the high end has been one of the outperformers.
Yeah, but it got hurt with the market the same way. Like when momentum stocks lose momentum, you get out of the way. And we spoke about that. If you look at this chart here, a lot of great two-way action. This was that ascending channel after an outside day to sell some. Remember, we said sell some here. If it breaks this, get out of the way. Well, it broke it and then retested and then it had a huge move down to below 44. But just like the markets, it had a nice reversal. So it broke back above this support, gave you follow-through yesterday. Now it's opening up probably into this 52 area. I would sell some. This is, I would consider a quality name to own long term, but if you're trading it, this area is going to be a tough one to get through, this 52, 52.50.
So now investors and traders are focusing on the holiday season, and there's not much conviction for a strong 2011 Christmas Hanukkah season. Coach and Tiffany are two names that have had a little bit of trouble because of that sentiment.
Well, let's look at Tiffany. I know it broke down. It was very weak, and it also, just like the market, I guess other things, came down, retested that low area, broke below it, came back above it. It's below the moving averages. It's a bit broken here. For a trade, it was okay, but as far as longer term, it could be in a bit of trouble. But what I'm seeing some healthier patterns in some of the, I would say, the lower end stores where people, get more bang for the buck and get more for their dollar. And I was looking at Walmart, and this chart actually looks much better to me, technically. If you look at Walmart here, you'll see I just talked about downtrends breaking. You have a high, lower high, coming up into it. It's actually above some of the moving averages. So this is telling me that if you want to be in something a little bit longer term, for a trade above $53, it could give you some power here for cash flow. But as an investor, it does look like it has a path to the upside.
So it'll be interesting to see how the holiday season plays out with the high-end, the low-end retail names. Consumer is in focus. I think we have September retail sales, and then tomorrow we have the employment numbers. It's a lot for us to look at this week. We're going to jump to a quick commercial break, and then we're going to go into the trenches.
When the closing bell rings, it's not quite time to run off to happy hour.
Good afternoon, Scott Redler, T3 Live. Welcome to today's recap.
Before unwinding, take stock of the trading day. What's the complexion of the market? Which trade from the morning call triggered? What sectors are in play? And where will the opportunities be tomorrow? Scott Redler covers it all in the T3 Live Daily Recap video. The T3 Live Daily Recap airs every day after the close.
As far as these markets are concerned, we got to take off those glasses.
Welcome back to the morning call. We're going to jump into the tech space for the trenches. There was a lot of speculation yesterday that Microsoft might make a bid for Yahoo off of a Financial Times article. Then All Things Digital came back and said that Microsoft was refuting it. So a lot of activity in Microsoft and Yahoo yesterday.
Yeah, well, Yahoo's been jumping all around on these rumors. I think they messed up. They should have sold their company way back when for over 30, but that was then. This is now. Microsoft, the chart looks pretty decent. I'm looking at a lot of these mega caps, and there are individuals out there that want a dividend, and they also want a name you could trust and liquidity. So some of these are they're looking better for people that want to put money at a little bit of a low risk and not expecting any huge type of return. So if you look here at Microsoft, that has a boatload of cash. I think the chart's getting a little bit better. If you take a look here, you'll see that it did not make a new low when the market's made a new low, some relative strength. It's trying to get back above some moving averages. So I think it's going to be slow, but at some point, it could get frisky if it starts to break above this resistance. So an easy area to about 27. I like to see you buying these mega caps on weakness, because if you try and get momentum, it doesn't happen often.
Moving on to Oracle, Ellison revealed his cloud plan at a special event that they held yesterday.
Yeah, Oracle's been one of the better ones. It's actually showing you year-over-year gains. Like you could have invested in Oracle a year or two ago. It's not in the same spot like some of these other ones. So if you look at Oracle, I do like the plan. I think institutions do like it. This too, I'm seeing a lot of these patterns. This is going to be really interesting to see if they start breaking. A lot of downtrends in place. If you look here, Oracle made a higher low. You have a low, higher low, higher low. Question is, can it break above this 30? Earnings are out of the way. It has some moving averages. I think this is a good spot to put money to work if you have a longer-term thesis, and I think the market hangs in there.
Moving along to Big Blue, Evan and I had a call about a month ago, and we did fantastic with this. We just closed this out on options profits for a nice 50%-ish plus gain.
Yeah, IBM has been a chosen one also. Actually, year over year, you can make money.
You're not going to get fired for having that in your portfolio.
Right. It's not just a place where money goes to pasture, which means it doesn't go anywhere and sit still. So IBM, I do like also. It's a bit more expensive, but you could put that one away.
Moving along to Cisco.
All right, Cisco, I'm going to get real quick on these last two. Cisco is showing some relative strength lately. I do see a bit of a pattern here. It held support. It's been holding this 15. If it can start getting above 16, I think it gets to 17 or 18. This is looking better than it did. Maybe they're back on track a bit. And lastly, the SanDisk. SanDisk is a stock that I used to trade. I used to love it. And lately, it's showing a lot of relative strength. So this is going to be one of my new go-to stocks, I feel like. Earnings are coming out in mid-October, so we have some time. So if you look at the chart here on SanDisk, you will see it's really starting to perk up for me. I did a little bit more work on it than I usually do. You have this descending channel. Okay, descending channels love to break to the upside, and I love to trade against them. You have a low, higher low, a much higher low. So it's showing you that there is demand here on these dips. So, for a trader, I'd like to see maybe pause at 44 for cash flow. It gets above 44. It's a good trade, and perhaps you see a nice pop, and as long as it stays above that, this has higher prices. It's telling you something here that institutions are accumulating this name.
Right. So mega cap tech names, investors, traders continue to like it. They're cash rich like giant bank holding companies. Strong management, deeply talented benches. Let's move into quick hits for some quick cash, and I want to talk about TBT and TLT and how they correlate to each other. So when the Fed makes announcements like Operation Twist, you expect to see bonds rally, but when they're actually in the process of going through Operation Twist, you see them come in a bit. So let's take a look at TBT.
Like a buy the rumor, sell the news, which is what always happens on Wall Street. So you take a quick look at the TBT. As you can see here, it's just in a downtrend, and obviously rightly so. And until it breaks, then you could play like extreme areas. But if this starts to get above 20 and can hold above 20, you might see a new, change in direction, so to speak. So watch that, and I guess you'll see the exact opposite on the TLT, where you want to ride these things. You don't want to fight a trend. It's in a very, very strong uptrend. It's following, the 21-day and the 8-day. If you want to do as far as a real tight stop here is right there around 120. So keep riding it until it changes, but make sure if this trend changes, you get out of the way because it's come a long way.
Moving along to GLD, the VXGDX, which is the VIX on gold, if you will, came crashing down yesterday, as did a lot of volatility within the market. I think the VIX closed at 37-ish yesterday. Yes,
and the GLD in gold has definitely been a spot that's frustrating. It had a huge move lower, which was pretty telegraphed, but down here, I've been leaning more that I think it's going to break lower, but now it's actually starting to resolve this wedge to the upside. So if you look here on GLD, my long-term thesis is to stay tier 1. But now for a trade, you have a nice consolidation. I love tight patterns. This starts to get above, just say 161, 162. You could see a gap fill up to 166. It looked like it was going to break down. Now it looks like it's going to break up. That's frustrating. So don't try and get involved. Wait for it to go and then just jump on, because right now the direction hasn't been established.
CMG, Chipotle Mexican Grill. This stock has had an amazing run over the past 2 years, but we've seen a little bit of outflow.
Yeah, well, the risk off trade, really hit a lot of these high growth names. So if you take a quick look at CMG, just like even like GMCR, you have to keep things tight. This was your push through failure at the top. We talked about it. Tried to break out, couldn't go. Then it broke this little mini uptrend, and it's coming to the moving averages. I think it's still viable, but be small here because these momentum names are not showing that much momentum.
Takeover chatter in RIM again. Seems like every other day there's another story where someone's buying RIM. Is there any viability in the company?
Well, I think anytime it gets into the low 20s and it actually became a teenager, we've said, I think months ago, I'm like, when this is a teenager, you'll hear the takeover speculation. Well, that happened. One day it might actually happen, but you just want to make sure you're doing it from a nice level. You had an igniting bar yesterday, so whether it's takeover chatter or whether people think fundamentally it's cheap enough, it does have a gap all the way up to about 27. And I don't think shorting it down here makes sense, but only buy it if you like the fundamental thesis, not for a takeover.
Rounding it out, I want to spend some time on Apple. August 24th, we got the announcement that Steve Jobs was resigning. He said, I can't do my job to the best of the ability. We came here Thursday, August 25th, and said, we're buying this. We like it. It's a deeply talented bench. The culture is all Steve Jobs. I believe in Tim Cook. I think there's some opportunity here.
Yeah, well, that was a great trade then, and now this is now. And again, unfortunately, Steve Jobs passed away yesterday. But before this, it was showing some signs of technical weakness. They didn't love the presentation of the iPhone 4 Plus. They wanted iPhone 5, but it regrouped, and it hasn't been leading the market, but it's been a little bit of a headwind. So if you look at the chart here, let me just show you what I'm talking about. This was that momentum when it got lost above 400. 395 is where we put some stops or had people say, get out of the way because it could come in, and it did. Came all the way down to the 200-day. It held it. Yesterday was down 5 or 6. Rallied up today with the news. It's down 4 or 5. So if you want to trade it long and you want to have defined risk, I would trade it long versus this 360. And if you have a bit more time frame, trade it versus this 353. I do think that traders are going to look for a negative to positive move. And if it happens, you can make some quick money. But then, as time progresses, we'll look at the long-term picture of Apple and make sure that technically it remains strong.
Right. So you have a lot of uncertainty out of the stock. I think investors are going to, they want to see what Tim Cook can deliver over the next 2 to 4 quarters. So it's going to be interesting to see how the story plays out. So we're focusing on TBT, TLT, GLD. There's a lot of volatility that's coming crashing in. So I think, those 3 names you definitely want to keep an eye on: RIM, Apple, and CMG. So
in closing, we have the jobs report tomorrow, and we've rallied into it. So we better have a really good one tomorrow, because when you go from 1075 in the SPX and now we're above 1140 heading to 1160 in front of a big number, you want to make sure you're not buying up here just in case the number disappoints and then you get a 20 handle down move. But in the same way, everyone's kind of programmed of just shorting 3-up days, saying, okay, it's that easy, but you can't do that either, because if all of a sudden, whether it's they cook the books or it's some kind of seasonality, or all of a sudden we go from 9.1 a little bit lower, you're going to get another push. And if you look at the SPX, you will see that this is an area of resistance, but I've seen crazier things where if you get a squeeze going, bigger resistance isn't up to about 1190 or 1200. So just know what your what your time frame is and what your risk is.
Okay, so we have a lot to focus on today and going into the weekend with that big employment number. I'm Jill Malandrino, and that is your morning call. That's good.